this point, I am going to hand over to our expert speaker now, Dennis Clarke. Dennis, take it away.
So good morning, everyone. Nice to see you all. I'm just going to put presentation on screen. We're going to run through. Bear with me. Okay, here we are. Hopefully everyone can see it all right.
Yeah, we can see that perfectly.
First of all, thank you for the encouraging introduction, Neil. I just thought I'd add perhaps that my business is providing coaching services to businesses in Wales generally, particularly on growing their business through export. And through this, we've got more and more involved, obviously, in the issues concerned with Brexit and new issues concerning VAT. So I approach this as a kind of business manager, a bit like you guys, rather than as an accountant as such. So bear with me if sometimes it doesn't take quite the same track as an accountant might. I'm going to cover extra help you can get at the end in any case, apart from direct questions and answers with me. There may be other support available for you that comes out of what we're covering today. So let me just start with an explanation. We're going to come across an awful lot of acronyms. I don't know why it is, but governments and government departments tend to really enjoy acronyms. And these are used quite a lot. Sometimes they explain, sometimes they're simply used. Some you probably know. We commonly use B2C and B2B, business to consumer and business to business. Incoterms, some of you may be using or understand Incoterms already. The two most commonly used at the moment in delivering to Europe or to the EU and favoured by the couriers are delivered at place and delivered duty paid. Delivered at place means the courier delivers it to your customer, but the customer pays the tax and VAT, and DDP, as it says, duty paid, means that you pay the tax if there's any due, and indeed duty. Because of the free trade agreement, often called the FTA, of course, there is now no duty on any goods which originate in the UK. Those of you that have got goods that are not of UK origin or EU origin may find that there's some duty due on your products, but again, you can cover that. You need to check with that through the tariff code itself. Distance selling threshold, DST. Before we left the EU, those of you who were exporting within the EU will know that you could deliver them to countries within the EU without charging VAT if you've got their VAT number up to a threshold. So that break has disappeared now between us and the EU. EORI, all of you, if you're exporting currently or plan to, I guess have got your EORI. This is what it means, Economic Operator Registration Identification. I think EORI is a lot easier in this case. And there are, of course, not just GB EORIs, but EU EORIs as well. Low value consignment relief. Any of you that are shipping products now that are low in value, like 22 euros, will find that there's no VAT on that because it's relieved. And then there's a lot of talk, particularly if you're dealing with couriers now or deciding what to do, over who is the importer of record, IOR, and what that means. And one last term used by couriers now is what they are calling an enhanced DAP. It's something that the couriers have invented, which is that they're using you as the importer to pay the VAT, but you're not actually the importer of record and what that means. So These are some of the things that may crop up to the talk today or moving forward. So on B2C now, so what I'm going to cover first of all is some few slides on how things are today since we began the transition on the 1st of January. The full transition has been delayed until the 1st of July because, I think partly because to allow for time for governments to deal with COVID and other issues that arose that weren't expected. So there's been some delay in the way the transition works. But currently we have already left EU, and as a result, there's no distant selling rules to the EU. If you're selling directly to a customer, you can specify the importer of record. This is the person who's going to pay the import duty. So normally, if it's not enhanced, so normally, if you are shipping your goods out to a customer, you can either leave them to be the importer, in which case they will be the importer of record and they will pay the VAT. If any of you have a holding stock in an EU warehouse, however, you will still benefit from the distance selling rules, although you would have paid your VAT on import to that EU warehouse. It's a lot easier if I can look around the room and see everybody's understanding this. So I am looking at the pictures a bit. If there's anything that I'm saying as I say it, perhaps make a note and we're going to come back to it, or if it feels it's relevant, Neil will perhaps interrupt me with a question in any case. But I'm more than happy to make this some kind of dialogue. Those distance selling rules were anyway, there was a threshold of 35 to 100,000 euros, but they're no longer there. However, let's move on to the B2B. So if you're shipping to Europe, you really don't want, there's no acquisition tax applying now between UK and EU. So if you're shipping to the EU as an exporter, you're not due to pay any tax. If you do pay the tax to your customer, that will be the local EU tax, and unless you're registered there, you'll be unable to claim it back. So it's not really a good idea. The way that you would normally ship goods out now, B2B, is shipped directly to your customers. You can use your EORI, but you must use their EORI on the invoice because they're the ones that are going to pay the VAT and can claim it back. If you import, then you pay the VAT and you can claim it back. I think that's more than anything the issues that are covered in here. I don't know if any of you are shipping through Amazon. So Amazon, as you know, as those of you who did know, had a number of fulfillment centers and satellites around Europe and the UK, the summit centers, so-called summit centers. But Amazon are no longer shipping from the UK to the EU. If you are selling to Amazon, you as a seller must import directly to, or export and import into, an EU fulfillment center by Amazon. Amazon also insists that you do this on a DPP, that's delivered, it should be DDP, not DPP, sorry, delivered duty paid There's a mistake. Sales were delivered on a DDP or delivered duty paid basis, which means you are paying the duty if there is any, but definitely any VAT or sales tax. You will also need to register at the moment in each of the countries with an VAT registration in order to claim that VAT back or lose all the VAT. So I have companies doing this currently, and they have a series of VAT registrations and an awful lot of paperwork and an awful lot of documentation. However, what it does give is a better customer experience. A better customer experience because the customer orders at a price and has it delivered at that price. Those of you that are currently not paying the VAT to your customer find that they then get hit with a bill or charges from the courier for VAT, and sometimes a charge for doing that VAT collection. And this can cause customer dissatisfaction and also returns, which gives you another problem of returns, because again, you may lose the VAT in return of the product coming back. Your e-commerce alternatives are listed here on this slide. You'll get the slide. I'm not going to spend too long reading it out, but this is how we go now, which kind of summarizes what we're doing. And this is the different of these three ways to go. The one on the left, where you are the importer and pay the import VAT, will require you to have either you'll need a European VAT registration, or you won't be able to claim the VAT back and you'll just lose it. If the customer is the importer and pays VAT, then you don't lose that VAT. However, VAT is charged on any goods over 22 euros, and the customer, as I said, can be disappointed with that, can lose your business and increase returns. Another alternative is to have an EU stock holding, where you actually put goods into the EU warehouse and then you ship from that EU warehouse. You can then rationalise your VAT. There is more VAT reporting. This is also a problem for high SKU businesses. I'm imagining for some of your businesses that you've just described, if you've got a lot of items and variants rather than 500 tubes of the same toothpaste, then this is less likely to be an option for you, because you'll have to carry a lot of stock to cover your different SKUs. Okay. Also, just to define what the EORI numbers do, the EORI numbers link your imports to your VAT records. That's the job your GB EORI number does. And you must show it on all your import documents. If you have a second EU EORI, it should be for the first EU port of entry. In other words, you should register where your first port of entry is. However, in practice, we have found that this is not being policed very well. And so you do end up with a fair choice of which country you can use. At the moment, a lot of my clients are looking at France and Holland as a little easier. And in Belgium, Germany has stopped giving EU registrations to non-resident companies or companies that have a presence in the country. And France does require fiscal representation, or may require fiscal representation. So there are different reasons and different advantages. A number of people have been using Ireland because there are no language difficulties. But again, the rules are changing. So you do need at least one to enter the EU. And you may need more if you're shipping out to different customers as well. I guess some of you, I guess you've all got GB numbers, and some of you even have got second EU EORI numbers. So moving on quickly then to transition, VAT, and how things are moving. The online marketplace in particular, what are going to be liable for charging VAT at the point of sale. This is the biggest difference that's going to happen, made by a non-EU business for goods sold in the EU. So the way things change now is actually that Amazon would have a liability to collect that VAT on your behalf, but they are going to collect it and probably not going to report it. And so there are a number of ways for this to come through, which I'm going to run through you now. Why have we got these? I don't know if any of you were involved in MOS. MOS was really designed to combine a mini one-stop shop that we had and still have currently, was designed for distance selling of software, learning, online learning, so it's electronic delivery, electronic products, software products, and was really more suited to those kind of products which were bypassing a lot of the import threshold simply because they were cloud-based services or they just didn't really, there was nothing to import or export. So this has now been extended from that into what are called electronic interfaces, EI, which is basically online e-commerce. So e-commerce now has been pulled together into this one-stop shop system. And the one-stop shop really combines your sales of one registration or one country in EU into one. So you no longer need to register with a number of countries. For all EU countries now, the distance selling thresholds have disappeared. There's no more low value consignment relief, that's been stopped altogether. So those of you who were sending very low, these are consignment, not product value. So the consignment itself had to be fairly small in order to achieve that. But some companies were doing that in a large way. And so that's been stopped. If you hold stock now in the EU, or where you will need to register for VAT where you hold that stock. And then finally, to replace or as an alternative to the low value consignment relief, there's a new import scheme, the IOSS, for items of a low intrinsic value, in fact, below 150 euros. I'm going to run through this chart now. You will get a copy of it to look at in more detail, I guess, but to make sure what I'm trying to say here. If your website and your business is based in the UK, it doesn't matter really whether your website is in English, in French, in German, or whatever, and it can be accessed obviously right across the EU in different language sites and different currencies. So if you actually convert your sites then to the local languages and then convert your checkouts on those languages to Euro checkouts at the prevailing VAT rate of the country that the people are ordering from, and there are checkout trolleys that can do this for you, this would apply the local VAT at the time that you need to go out to. So if you start on the right of this with the customer and the trolley, then once they place an order online, payment comes back to you directly. And that payment includes the local VAT of wherever they are. As you may know, the VAT rates do change by country across Europe, across the EU. Your business then would have, under this scheme, and will be registered for a European EORI. Ideally, actually have a European stocking centre, but doesn't always work, as I said. So when you export goods, you make sure you export them under your EU EORI number, because that is your receiving country's import number, which they need to rationalize the tax. However, so this goes to the receiving country, which in my case, I've just made it Holland for the moment, assuming you've got an EU registration in Holland. You make the VAT payment. I haven't done a line to show you shipping the goods, but then never mind. You make the VAT payment here into the Dutch government. So the Dutch revenue will collect your OS payment, and you record that in the VAT return you make there. The details of that VAT payment and return are then shared here on the EU flag, which I've called it, with an EU data exchange. So the EU in its pool knows that you have paid the VAT, you returned the VAT, you've made a VAT return for the VAT you've been paid by that customer. If it were checked at customs, and a lot of the time it won't be now, it will go through, but if it's checked at customs, this guy may look to make sure it's not due any duty, but it'd also be able to know, and he can relate back to the EU data exchange, know that the VAT has been returned and it's clear, and there's no more VAT due at point of sale, so the goods will be given to the customer without any further charges. So that data exchange takes place from the German data collection point and the Dutch collection point. You have, of course, in the meantime, shipped the goods directly across the border through the customs to the customer. Okay. I mentioned low value goods. The good thing about this is that the difference between this and previously for you guys is that if the consignment is less than 150 euros, there's no more impact of the VAT, import VAT, to be paid at the border. But also remember that transport and insurance charges are not included in that. So if you are detailing your invoice, if you're free delivering, my advice to you would be to stop invoicing free delivery, because that will be including the value of the goods, and it may push a goods of 140 euros up to 160 and stop you using this scheme. So be careful, check whether your delivery charges and indeed any duty and so on, make sure that they're not included in your selling price. And obviously no VAT. So the VAT is charged and collected at the time of sale. That means when the customer makes the purchase, that's when it's charged and collected and where they are. And the way to deal with then is to deliver to the customer DDP, but register for local EU VAT. And then you can account for that VAT in under your EU EORI, if there is any. But you can account for that, any charge you've got on that, through there. If you don't register, then you can't use this scheme. Then you would go back to where you are today, or you don't benefit from it. If the consignment, if the consignment is over 150 euros, then it goes back to the normal clearance, which I've just outlined above, which is the VAT is due at the time you're importing it through, and there's a customs liability and an import VAT due. So time's running a bit short. The 1st of July is coming. I've put here some kind of a list of some suggestions. Register with one, maybe more, but normally you need one. Register with one EU VAT registration. Review your supply chain. Does it help you to have a warehouse in one of those countries? Obviously, you're not going to build and have your own warehouse. You're going to use someone else to hold stock for you, and you're probably going to use some sort of fulfillment service as well from that warehouse. You may already be doing that. The logistics are really important. So many of the headaches are not VAT, are not charges, they're delays. There will be delays, first of all, so allow for delays. Make sure your customers are prepared for some delays going forward. Couriers, freight forwarders, who are they? Have you got them lined up? Have you shopped around? Are you getting the best service? If you do have goods coming in from out of the UK and EU, make sure that you know the country of origin and you can check the tariffs using the harmonised tariff schedule, which is on the Gov.uk website and the EU website as well, which allows you to access that register and check the tariffs of your products. Know your commodity codes and make sure that on your commercial invoice or your shipping documents in any case. Set up VAT deferment. Those of you who are paying VAT in the UK on your imports, particularly that are coming in, may know already, but if you haven't, you can register for VAT deferment where you don't, although you are due to pay the VAT on import, you don't actually pay it. It is due, but you record when you do your VAT return, you put it in there as due, but it gets cancelled out again. So effectively, you don't pay it until you reclaim it, which means that you don't have a cash flow issue. Access support available from the Welsh Government. They are giving quite a bit away at the moment, but there is funding available. There is support available. So there's practical support and advice, and there is funding for products. I think the current one is about £2,000 towards projects that help you prepare for Brexit. But there are other routes to support as well, which we can go with you. I'm sorry that's been a little bit short, and we've covered a bit in a short time. I expect there are some questions now anyway, but as Neil said at the beginning, my email number is here. If you have questions even afterwards, I'm more than happy if you come back to me at any time. But I guess if you're not got any more questions for now, it's back to you, Neil, for a moment.
Yeah, great. Thank you, Dennis. It's both fascinating and terrifying to realise just how complicated it can be. I mean, I know, thankfully, my business partner deals with most of this, so I can remain broadly blissfully unaware. But so going back to certainly from my point of view, so we have two sides to our business, one that's B2B and one that's B2C. The main concern I have at the moment with our business is just that you mentioned about the VAT, because we don't charge obviously our EU customers VAT as long as they have a VAT number. So can you just explain again how exactly that's going to work? So we're sending them products over £150 worth, sometimes up to a couple of £1,000 worth. Now, or do we need to charge them VAT at the point of invoicing, or how's that going to change after July?
Are you talking about business to business sales?
Sorry, yes, business to business, yeah.
Okay, so the only thing about the business to business, nothing really changed with the business to business sales. You're exporting out of the EU to the EU. Okay, so there's obviously no export on that. When it arrives at the EU, then there is VAT to pay. Did you say you're paying that?
Well, currently the process that we're undergoing is it's done through the EU scheme. So we've got their EU. We ask them for their VAT number in advance, and then we just don't put it on the invoice.
Correct. So that's the right way to do it. So you have their VAT number or their EORI number, and then you don't charge them any VAT. And so that for you is the end of it. They will pay the VAT, and then they'll process it through their normal VAT return.
Right, so they will now be eligible, they will be liable for a 20% charge on top of...
Yeah, exactly. Previously, they didn't pay any VAT. Now they pay it and reclaim it. That's the only That's the only difficulty with it, but that's not too bad.
Oh, right. So ultimately they get their money back. But what I'm just trying to think of is, from a customer point of view, is are we just suddenly 20% more expensive to? I mean, we're 20% more inconvenient, I think, is probably the best way to.
You're exactly the same. And for those that some people know you're doing e-commerce, you may be importing as well. So if you're importing from anywhere, actually, but if you're importing from the EU, then it makes sense that you pay the VAT, or you make yourself liable to VAT, and then you offset it against your next VAT return.
Sure.
And your customers will do the same. They won't actually pay the VAT. It's just really an administration moving from one side of the pay to the other.
Great. Okay. Mark has a very unique and interesting question, I think, and not many of us will, but I think there can be some insight from this. So most countries don't charge VAT on disabled products. How do I find this out per country? Is there a way of finding that, per product? Because obviously everyone's, I mean, most of my business is selling T-shirts and merchandise and whatever.
Yeah,
so
okay.
It's very different to what Mark's selling.
Okay. Good question, Mark. I've actually got, let me see if I can find it. If I can't find it straight away, I'll send it to you. Give me a second. I've got a table. No, I'm not going to do it that quickly. Okay. So
I can always get that back to Mark.
I will send you, Neil, if you like, a table of all the VAT rates across every country and what they are. You will find that we are one of the few countries in the EU that make allowances for things like children's clothes, disability products. We're much more socially aware, it seems to me, because in the EU, almost everything is standard rate across most countries. I've been quite surprised. The reason I have the table, I was checking it out, Mark, for actually children's clothes. And we are the only country that do not charge VAT on children's clothes or children's products, or indeed with another company, menstrual products and so on. So it was all like, we're much more generous in that way. But I'll send you the table and you can check, Mark. You'll have them all through.
Perfect. Thank you. Thank you.
Thank you. Great. Oz has asked, they're selling software installed directly to client infrastructure and associated support. So there's no physical export. What would the changes mean for them? And I suppose that comes back to the MOS to the OS thing you were talking about earlier.
Yeah. So if you're supplying from the cloud, I'm guessing that's, but the service is not being delivered through the cloud. The software is being loaded onto the customer's laptop or computer. And that was what MOS was decided to pick up and does currently and will do after the 1st of July.
And it looks like they will. Sorry.
So there is VAT due at the point of sale, without going to the specific company, but if it's what I said, then there would be VAT due at the point of sale.
Right, and then they access the services from the cloud, even though the software is installed on the client computer. They will access via the cloud, but so they will be VAT payable then.
Yeah,
okay.
I mean, for example, if it's just, I don't know what it is, but if it's just providing it's interactive, I think that's tends to be the main issue. If it interacts. If they just read it, like if it was, I don't know, information, looking up something on Google and reading it is one thing. Interacting with a learning course where you actually, respond to questions and so on, then that's
right. So that's almost the defining factor that they.
Well, not necessarily, but that's one example of when it works. But you're right. If it's available to all, and you've just, so for example, what my ask might be, well, Netflix, for example.
Mm-hmm.
So Netflix is providing infotainment across the TV sets around the world and computers, well, and any device, and you're paying a fee for that. So the fact that you don't necessarily interact with it and it's maybe not even being streamed from your country, it still has an issue.
Gotcha. Okay, that makes sense. Before I move on to the next question, I'm just going to add a link in the chat. So for anybody who has not yet signed up to the newsletter, I know that some of you may have been forwarded the information by a colleague or then you can do that via the link there. And also, all upcoming events will always be published on this link. We have some good events coming up. Some are already published, several more to come. But you can access those two links. Should be useful to everyone. And we have a question here from Anthony David. Does the €150 figure for no additional duty being owed apply to B2C orders only? And your gift importer, is that?
No, it's for anybody. Just that it generally only really concerns B2C, but no.
Right, because B2B has always been broadly over 100.
Well, you're unlikely to. There are less consignments below 150. Yeah, I suppose.
Yeah, okay.
I was thinking it's something that B2C benefits more from, but it's not a B2C B2B thing.
Right. Okay. So it's just flat.
It's based on the consignment value.
Right. And also you mentioned that interesting point about free delivery, actually. So the delivery charge is not part of the threshold.
Yeah. So just explain if you sell your item, if you're actually selling your item for €140, but you're building in the €10 it's costing you to send it, and you're selling it at 150 with free delivery.
Yeah.
155, but let's make it, so it's more than 150 with free delivery. By all means, don't charge the customer delivery, but itemize it in your shipping documents to show the price of the goods. So bring the price of goods down from 155 free delivery to 145, 10 delivery.
Gotcha. Or, obviously just say the item is free, but delivery is 155 quid.
That's another way around it. Yeah, exactly. Yeah.
Yes. I'm not sure how far you would get with that with the authorities, but yes, it's. I can imagine.
There's an argument, but I have an idea that you wouldn't get away with it if your shipping was more than the cost of goods. I mean, it could be, but yeah, I see you've immediately jumped onto something that millions of people have already thought of that, but there we are. But you're right.
Yeah, exactly.
Yeah.
It's the,
and in fact, it's the reason they've stopped the €22 allowance as well, the low value relief, is because it just was abused so much.
Right, gotcha. Yeah. I can imagine. Yes, and okay. Do we have any further questions? Any last questions for Dennis? I think we've. Like I say, we're going to pass on the slides because there's a lot of great information on those. I'll be passing that slide deck on to my business partner because I'm sure he'll get a lot of value out of that. And you say Welsh government. I saw the thing about the Welsh government are offering £2,000 support for. Yeah. Do you know who is delivering that support, or would we be able to engage your services for that, or is that do you know how that works?
I have a feeling. So first of all, there are services provided by the Welsh government, which is kind of what I'm doing today, and I do regularly to help companies out. So that one applies anyway to the Welsh government, and the Welsh government selects or allows you to choose some sort of support, whatever that might be. As I understand this grant, and it is quite new, it really is something you apply for to spend on, what you think you need to spend on getting ready for Brexit. You're not required to spend it on things provided by the Welsh government, as far as I'm aware. So, right. For example, and I know we've got an accountant here today somewhere, if they're still there, if, and I would advise people to do this, I'm advising companies, if they're not sure, at least for now, it will pay you to employ the services of a VAT specialist company. Once I think it's established, it becomes repetitive. You may not need the specialist all the time, but in the beginning, I think setting everything up, and in these early stages, you may save in the long run if you actually find a specialist. And if the price of that is an obstacle, then that would be the kind of thing that I would think, but then I don't give the grants away. I would think that would be an ideal use of the funding.
Yeah, no, that makes a lot of sense. It's my colleague and I, my co-founder and I are definitely going to take advantage of that, I think, because like I say, we have two different sides of our business, and yeah, it's complicated. Neither of us are accountants or VAT specialists, and also we're aware that it's not probably the best use of our time insofar as it would take us so long to unpick so much of this stuff because of the complexity of it, that it would be better to get somebody who really knows what they're doing. And what was the name of that funding? Is there? I did actually have an email. So
I think I don't remember it. There is an email from the government, but I don't know.
Let's see if I can.
Maybe, I don't know.
Let's see if I can quickly find a. There is a. There we go. So there is a link that's. I'm going to put this in the chat. Buyer beware. I'm not 100% sure. Oh yes, it is. It's the SME Brexit Support Fund could give you up to £2,000 to help with training or professional advice. If your business has up to 500 employees and no more than £100 million turnover. So I'm going to bung that in the chat. The grants for training, grants for professional advice, and there's an application. And deadline for applications is 30th of June. So there's plenty of time, but I don't know whether this is a finite fund. So probably better to get in there soon.
Well, the timing of that is ideal, perhaps not by luck, but now is the time because the new rules come in on the 30th of June. So you're going to need this help. You're going to make sure you've got your ducks in a row before 3rd of June.
Brilliant. Fantastic. Well, thank you, Dennis. We don't have any further questions, so we'll leave it there. You'll get a follow-up email with Dennis is going to pass on the slides and that table of VAT by country. And yeah, obviously, if you have any questions, you can always contact me, neil@neilcocker.com. But if you want to book in a session with Dennis to get a bit more insight, that's dennis@dennisclarke.co.uk. Yeah, thanks everyone for turning up. And yeah, class dismissed. You're free to head off. Dennis, if you could stick around 30 seconds and we'll have a quick chat afterwards. But thanks everyone. Really appreciate your time and attention, and hope to see you again soon.
Thanks everyone. Bye.
Cheers.